Welcome to this new episode of Your Next Trade, episode number 17. Question mark, like it hard or soft? So far in 2023, the market has been experiencing a strong rally across asset classes on big hopes of a soft landing in the US. So as you can see, many asset classes have been doing very well. And now the question mark is how much is priced in by the market and how far can we go? So let's start first with the year-to-date asset performances, where as we can see, stocks, Europe and the US are up between 6 and 10%. So really strong months of January so far. That is one of the strongest months in Europe, where the Stoxx 600 is up 7%, the Stoxx 50 10%, S&P already up 6% for the year, double digit for the Nasdaq. For the currencies, the story is more or less the same as last week, where the US dollar has been weakening across and against most of the currencies and is down 1 to 2%. Bitcoin up 40%. For commodities, we get the gold up 5%, and actually WTI, despite a lot of noise, is still flattish and trading around the $75-80 level. And the copper very strong on hope of China reopening. So on one hand, China is helping copper up 10, but WTI is staying at the same level. Natural gas, both in the US and in Europe, down 30% almost. What about the week-to-date asset performances? So strong week, another strong week for stocks, where the S&P is up 3%, 2.5%, Nasdaq Composite with this beta and outperforming by 4%, Russell 2%. So really strong for the US. Europe has been consolidating after a strong move. Currencies, not much happening. China, should have said before, closed for most of the week due to the New Year's Eve, the New Year's in China. Bitcoin, Ethereum, flat or flattish for the week, and then similar for commodities, small down. So if we look at the year-to-date industries performances, this is really a risk on. So as before, similar utilities, consumer staples, healthcare, mostly the defensive sectors have been underperforming the sector by quite a long margin and are down for the year. So this is for the S&P, which is standing here. But as you can see, you have many industries and sectors that have been outperforming the overall market, where social media, online retail, semiconductors, so really a strong risk on. And many of the sectors, the factors that underperformed in 2022 are having a very strong 2023. So I hear people saying, I'm up 10, up 20, I'm 30% for the year. But don't get me wrong. If you were down, let's say 70% last year, and now you're up 50% for the year, over the same period, you are down 55%. So be very careful about the noise. We've seen a lot of sectors and factors. We are talking the most shorted stocks, the highly beta stocks that are outperforming. And it is really so far a strong January effect. Week-to-date industry performance, this is the same picture. So online retail, consumer discretionary. Consumer discretionary is mostly Tesla. So Tesla is making a big chunk. And with Tesla trading now at 180 after being at 100 at the start of the month, that tells you, or that was months ago, that tells you about the move. But literally, we got those big outperformers, which again, are mostly the most shorted stocks, the ones that really underperformed last year. So a strong reversion to the mean. If you look at the year-to-date sectors performance, the telco, consumer discretionary, IT outperforming, similar healthcare, utilities, consumer staples down on the year. And a week-to-date, again, consumer discretionary, that is with Tesla really distorting the numbers. But that tells you about the appetite that we have seen recently, at least for the last 3 months in the market, very strong. Feels very much like January 2021, where you get but many stocks that went through the roof. Market is very much driven by short-dated options, with the names like Tesla, really where the cash is following the options. You get a tons of options that are trading. Most of them are 50 to 70% of those options will be zero to date expiration. So that means they will be expiring on the day. And as those leaders, those Tesla will be leading the market, you will have some other names that will be following. Not necessarily the best quality names, literally the poor quality, poor EPS, poor balance sheet will be outperforming the quality. So what about the rates? Rates looking at the 10 versus the 2 and looking at the 10 year. So China was closed for the week, but it's roughly around 3%. So the US 10 years is at 3.5%, waiting for knowing more with the FOMC meeting this Tuesday and Wednesday and the expectations on Wednesday. So 3.5%, we're going to have a lot of central banks this week. So FOMC in the US on Wednesday, and on Thursday we're going to have the Bank of England and the ECB. So that's going to give us a bit more picture about what is your next trade. In terms of the yield curve is at the same level that it was a week ago, 2 weeks ago, 2 weeks ago. So pretty much a strong inverted yield curve, down 70 bips, which has been historically a very strong leading indicator. What about the euro dollar? So I wanted to look at the Fed expectations through the euro dollar and comparing the last from a month ago. So the 14th of December was when was the last FOMC meeting. So you can see on the chart here in blue, we get the last pricing from the euro dollar and the pricing from a month ago. And the picture is more or less exactly the same. So there is not much of a difference. So that tells you that when market participants are telling you, oh, it's very different from a month ago, that explain the move that we had across asset classes, that is just not true. Nothing has really been changing. We are still expecting the market is still expecting the Fed to be at top hiking or the terminal rate around June of this year. So that will be here. And then we're going to have some cuts. So if you compare June 2023 to, for instance, December 2023, the market is expecting roughly 40 bips differential. So that's 1.5, 25 bips cut. And you're going to have furthermore going down into 2024. So in other words, peak in June and then some cut. That is exactly the same picture that we had a month ago or a couple of months ago. Now it's all about the Fed confirming or not versus the dot plots of what they have been saying that in 2023 that they are not going to be accommodative and rates are going to stay there for longer. What about the VIX? VIX 18%, 18.5%, so trading below the 20% on average since 1991. Implied volatility over a month for the S&P has been around 19%. What has been interesting is we have, and something that we discussed over and over, is implied volatility and realized volatility have been on the way down. So not much of a surprise. Market is still waiting for new catalysts for the next move. But what you can see is from the levels that we had in 25% and above, is the market is much more confident and is pricing with much higher odds that we're going to have a soft landing. So for the time being, many asset classes are pricing to the extent of 80% a soft landing and no more than that. Similar to last week, what I wanted to do now is, if the community has some good idea or some questions, is to add a topic, to add a tab to these weekly videos. And today I've been asked to be talking about the earnings call. So the earnings call, as we are in the middle of the earnings season, are very important. The reason is the following. When we get earnings, when we get sales, so that will be for the next 6 to 8 weeks in the US. So you get the news hitting the tape and you get the company making the comments about how the business is doing and as well about the outlook. So that will be the forward statement. And here I wanted to share with you a to-do list. So first, what we need to do as traders, as investors, is making sure that we gather earning lists. And that's something that we do every single week when we look at the catalyst. When are the companies coming and releasing their earnings? And that could be before the market, and that could be after market. And sometimes when they pre-release, that could be during market hours. So make sure that on all the companies that you are following that are on your watch list, you know when they are next coming with their earnings. But not only that, you need as well to be pointing where are the big companies, the market drivers, the market drivers on the market, let's say the Microsoft, the Intel of this world, or the really big companies, and as well the other competitors that you have in your sector. So if you're thinking about looking at, let's say, the semiconductors, what about you look at Intel, you look at NVIDIA, you look at ASML, and you want to know not only for your company, but overall, what are the different players talking. So for this example, I'm going to be talking about LVMH, which is a luxury company. It's a French company. It's a huge market cap, has been doing very well. And if you take the example of LVMH, which released their earnings, that was on Thursday after close, European closed, a few days before UHR, which is Swatch, came with some numbers already. So, and the outlook was pretty good. The stock did very well after the earnings, and the stock is up 10% since the earnings. So what is interesting, again, if you want to be looking at LVMH or any other company, what are the companies in the same sector that could come with their earnings a bit before? Then you need obviously to be checking when is the company releasing their earnings. Okay, so for the case of LVMH, that was after close. What is really important, and trust me, I lost some money in the past and I'm still losing some money when I'm not checking this, is you need to know when is the earnings call. Because the earnings call is when the company, most of the time the CFO and the CEO, will be discussing what has been going on during this quarter and what is the outlook. So for the case of LVMH, the call was done after the close, European close, but interestingly enough, if you are trading LVMH and many of the European stocks, you could be trading the ADR, the listed stocks in US. So actually, the stocks in the US, the ADR weakened roughly 1 to 2% versus discount versus the European close. So always know when is the company. What you don't want to do is you buy a company saying, okay, the earnings are good, I'm fine with it. Then you realize that they are talking during the market hours, and then the stocks starts to drop because you're not listening to the call and they are giving new information to investors. So if you don't have a Bloomberg, if you don't have a Reuters, obviously for most US stocks and actually even European stocks, their investor relation website will be pretty good. They will tell you when is the next earnings, and they will give you most of the time a link to have live access to their call. So you don't need to be an analyst, you don't need to be a professional trader. You can have access as an investor to the live call. What you won't have access to is it's going to be a struggle to ask any questions during the call. So subscribe to Investors Relation email list if you get a position and if you want to know when the company is coming with the earnings. So I took the example of LVMH here, both on the website and subscribing to their newsletter or to some of their updates if they give. Earnings call, how does it work? You get roughly two parts. The first part is the presentation. The presentation is done by the CFO, by the investor relation. In that case, on Thursday, that was by the CEO Bernard Arnault, and from the CFO. What is important for you as an investor is you like to have the top guys talking during the call, and that will be the CFO and the CEO, because that tells you how the dedication of the management. You don't want very often when the CEO or the CFO is not taking part of this call, this is very often a red flag. Then you get the second part. So the first part is mostly about the management saying about how beautiful their companies are, or they have a history of 20 years in the market, blah, 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 and how they care about their employees, for instance. Then the second part is mostly and it is about the Q&A session. So questions and answers, and those questions will be done by analysts. And we are talking analysts from the big firms. We are talking JP Morgan, Bank of America, Goldman Sachs, Citigroup, and some others. And they will be starting the call. Why? Because most companies will give the floor first to those guys because they think that they are market movers. So what is important for you is to identify who is the biggest analyst out of your stock. Okay, so if I take the example of LVMH, since I started 20 years ago to trade, it's always the same guy. It's a guy from Bernstein. It's an Italian guy. He's following the sector and he's a market driver. So that means, in other words, when he's asking a question, you know it really matters. So during this call, make sure that you know who are the biggest analysts of covering the stock. So try to identify the star analyst or the analyst who could move the stock the most. Then, based on those questions, those analysts will be always asking the same kind of questions, but by definition, they will be different from one company to another, from one sector to another, and over time. So if we take the example of LVMH, what was important during that call was why and how US have been doing recently, because there have been some scare that there is some slowdown in the US, and as well how quickly China could be reopening. So there were some talks that actually the activity in China in December was pretty poor, and they have been seeing some good pickup actually in Macau, in the casinos, and they think that if China reopens, 2023 will be a very good year. Then they discuss, how they deal with the discounters, how there is no discounting. So they will be talking more about their own LVMH business. So that is the first part, the big guys asking questions. If you are looking for some red flag or some questions they'll be asking, normally those guys will be asking those 2 to 3 big questions. Then what I really strongly advise you to do is, from experience, at the end of the call, there will most of the time be an analyst from a small shop, like a small company, not necessarily the big guy. If you take the example of LVMH, there was this guy from AGM Finance in France who asked a question relative about the luxury industry. But what those analysts from small companies need to do to differentiate themselves from the pack is asking a question that is different. And that means these questions could be really interesting, and there is a lot of value added in waiting and not only listening to the Citigroup, Morgan Stanley of this world. So for those earnings calls, there are 2 ways to do it. Either you listen to the call, okay, and you can do it live or after. So if you are a trader, you're better off doing it during the markets hour. If you are an investor and you get a bit more time, you can do it later. And you can be either listening or obviously reading the transcript. The positive of listening to the call that I like really, really much is you get a better feeling by listening to someone. If first how the business is doing, how the confidence is, and when they have been asked questions, how confident they are at answering it. And from experience, when a CEO or CFO is struggling with one question, that tells you a lot, and that's something that you can feel very much more than when you're reading the transcript. The beauty of the transcript is, if you're looking for some specific points, you only have to do a Control F. So very often what I do, I download the PDF and I'll be looking for LVMH and I say China, and China, it's going to give me 15 times when they'll be discussing China, and quickly I can have the points that are important. If you want to be looking and reading after those earnings call, obviously you have access to the company's website. There are websites that are specialized on it. You can go on Seeking Alpha, or you can download some apps, some very good apps on iPhone, for instance, where you can listen, maybe some of you when they are running or going to the gym, or even when they are doing something else, be listening to the call. So this is more or less what I wanted to do today for the earnings call. And if you have some topics that you'd like to discuss in the future, or for me to give you more detail, please ask me and send me an email. So Technical analysis. So now everyone has seen the same picture. So the S&P has been breaking this downtrend. So as I've been saying before, there was a good chance that we'll be breaking higher. It feels to me like very much this is a bull trap. The reason why, to me, it is a bull trap, if you look at the volume on the SPY, if you look at the volume overall for most stocks, if you put aside the Tesla of this world and the options-driven stock, the volume, the participation have been very small. So to me, that is, if you don't have participation, the breakout is not validated and is very much like a bull trap. But the picture for the S&P, for the Nasdaq is the same. We broke those downtrend. Russell has been actually, Russell again is not making this breakout, which tells me another picture. So Russell is more USA in terms of sell oriented than the Nasdaq and the S&P. That tells you that if you are looking for a US investment, so far that has been underperforming. Emerging market, China was closed for the week, so not much. Euro stocks or the stock 600 taking a bit of a breather. CL1 for WTI trading sideways, so a lot of noise around CL1, around WTI, but not much happening. Copper consolidating with China, because again China closed. Euro dollar yen consolidating. If you look on the single names that are going to be coming with the earnings, so last week we look at Google and we look at Microsoft and we look at Triple M, which actually the two were pretty right. If you look at Meta, we are reaching very important level at 155. We got earnings this week, and that's more or less the same with Google. So important level, Google's got a bit more, 5% upside before reaching an important resistance. So that is for the quick technical analysis. Again, market is still grinding higher due to very few names and reversion to the mean, and the sectors, the industries, the factors that are outperforming this year are the ones that were struggling last year. If we look now back to this week, what has been happening, as I mentioned last Saturday, there were three drivers. So the PMIs in the US came out a bit better, both on the services and the manufacturing. So they are 3 months high and 2 months high. But if you look at the picture here, we are still at a very low level and we are in recession level. Okay, so don't get too excited. For the time being, not great numbers. Second part of the equation was the earnings. So for the earnings, we got 67% of the S&P companies that came with earnings above and 65% of the sales. But overall, if you look at not only the S&P, but for the US stocks, the beat on the top line and the bottom line are below average, and actually the magnitude of the beat, despite the numbers that we have here on the sales, is below average. So in other words, market is some stocks reacted pretty well, and actually there was a good chart today or yesterday about companies that missed EPS in the US clearly outperformed the companies that beat the expectation. So there is a bit of a hoo-hoo phase in the US market, where the numbers both in the US and in Europe so far, and it's not, it's only 30% now to 40%, have not been that great. So if you read somewhere that earnings have been very good and beating by margin versus historical numbers, that is just not true. Plus, you need to take into account that the earnings and the sales were lowered drastically over the last 6 months. So what about the catalyst going forward? So very busy week for this week. So we got the end of the month, which sometimes give you some rebalancing depending on how stocks and bonds have been doing. But more importantly, we do have a lot of central banks. So central banks, the most important one is the FOMC rate decision on Wednesday. 99% here is priced by the market, so you should not expect to have much of a surprise. Now there's the talks and the pretending as, are we going to do another 25 bips or not? Is it that different to have another 25 bips? September, October last year, the market has been pricing max rate or peak rate from the FOMC around between March to June. So nothing has really changed. What is more important is, are we going to see some cuts from September onwards? Here you get a difference between what the market is pricing and what the different Fed speakers have been saying. So FOMC on Tuesday, and then on Wednesday, and on Thursday, Bank of England expected to raise rates by 50 bips, and same with the ECB. Before that, we're going to have the Chinese PMI. So we get two PMI in China. One is going to be on Tuesday and one Wednesday morning. And we have obviously the ISM manufacturing few hours before the FOMC. So wait for, similar to the earnings call, don't only look at the headlines from the FOMC at 7 p.m. UK time on Wednesday, but wait and listen to the FOMC press conference that will be at 7:30 because this is going to be a market driver. So what has been happening so far for the S&P on FOMC week? So far the last 3 weeks of the FOMC, market has been down between 2 to 4%. The market has been struggling a bit more recently, so you see the red here. When on FOMC week, the expectations are pretty high that it's going to be that the Fed starts to pivot or is going to say this is it. So in terms of pricing, both from the FOMC and from the soft landing, I think we are getting close to the 80-90%. How the S&P has been doing on the day of the FOMC until 3 FOMC meeting, Powell was doing very well, and the market really likes what he was listening to. Now, over the last 3 FOMC meetings, that has been a different picture. So that has been the trend. In terms of other numbers, we get the NFP, so US data for unemployment on Friday, which is one of the factors that the FOMC is always looking. You need to take into account that the NFP is a lagging indicator, and those numbers will get worse over time. That has to be, even if it takes time, it will come at one stage. We're going to have as well the ISM services. ISM services have been pretty weak recently, so that has been the last shoe to drop. That was only one number. We're going to see if there is a follow-up in this data. And then, like last week, earnings, 113 companies, roughly 30% of the market that is coming and releasing their earnings. We're going to have names, as I said, like Meta, like T-Mobile, Qcom, Qualcomm, tons of names coming. So overall 30%. So after this week, we're going to be around 65%. 2/3 of the US companies or the S&P companies that have been released their earnings. So important because so far, again, earnings season has not been great, just hawkish at best, but the price action has been pretty strong overall for the market based on these crazy zero-to-date expiry options. If we look at volatility, something that I just want to mention every single week, looking at the SPY at a weekly straddle, meaning by how much the market is pricing a move from the S&P. Until Friday, market is pricing 2.3%, which is above the 1.7% that we had last Friday, which can be explained by central banks that could create or generate more volatility, and actually investors hedging more their portfolio based on these important numbers coming. But 2.3% on a weekly move is not that much if you think about it. And not so long ago, we had 3, 4, 5% move. So far, market is very much the same as last week. But interestingly, over the last 2 to 3 days, there have been a strengthening of the options phenomena, the options call that we had in 2022 and 2021, mostly through names like Tesla, and some other names are following. So this is it for me today. So 4x4, if you got questions on the videos about the trading community, please first feel free and join us on Discord on the trading community. And if you want me to discuss next week something that you find interesting, please send me an email and I'll try to discuss it. This is it for me for the week. Have a good central banks week and earnings. See you next week. Bye-bye.